Hi everyone, thanks for being here. We all know that crypto assets have been around for a while, and it's only now that efforts to regulate them have moved to the top of the policy agenda. The spectacular, if volatile, growth in the market capitalization of crypto assets and their creep into the regulated financial system, as well as the risk to consumers, has led to the increase in regulation. But it's pretty obvious that applying existing regulatory frameworks and developing new ones is no easy task. So with us today to discuss the topic are Rocky, Michael, John, Chia, and Julia. And before we get into the meat of the questions, if each of you could take a minute to introduce yourselves and your work in the virtual asset space. Rocky?
Yeah, thanks, Kat. Hi, I'm Rocky Mui, partner of Clifford Chance. So I'm just another ordinary fintech lawyer covering the tokenization space. Just really quick, so I head our Hong Kong asset management and financial regulatory group, and also the fintech practice. And our team do a lot of the blockchain tokenization, digital asset projects right now. Thank you.
Hi, everyone. My name is Michael. I'm Senior Vice President and Global Head of Sales for Bullish. We're an institutional and regulated crypto exchange. I'm excited to be here on the panel today.
John Cahill, representing Galaxy. I run our Asia business. We're a merchant bank, investment bank, global, focused on institutional crypto.
Hi, my name is Hock Lai from Singapore. I'm the co-founder and co-chairman for Global FinTech Institute, which is an educational non-profit that focuses on fintech education. I also run a crypto payment company in Singapore. Thanks.
I'm Julia Charlton. I'm a lawyer in Hong Kong. I'm working on corporate finance and securities law, including crypto, licensing, crypto funds, tokenization, and investment in crypto.
Thanks, everyone. So let's take a minute to set the scene. Could each of you explain briefly, what in your mind makes for good regulation? And we're going to start with John.
Thanks, Kat. I think there's three main things for good regulation, and it kind of starts with a statement from the government around what their intention is. You know, Hong Kong's done it, was saying they want to be a center for Web3, to attract entrepreneurship, to attract capital to the city. So I think that's the first part. The second part is engagement with the market. So instead of coming up with regulations in a vacuum, you know, engaging the market, listening to what consumers want, listening to what entrepreneurs want to build, and listen to where capital is flowing, and that's, I think, a very, very important part of it. And the last one is the regulations themselves. Regulations ultimately should enable business with some guardrails. It should enable, you know, profitable business and also ultimately encourage the entrepreneurship that it's meant to regulate.
Rocky, Michael, anything to add?
Sure. Yeah, no, I think I've been saying this for the last 2 years, that regulatory clarity brings confidence into this industry. It allows people to navigate and understand how to play in the right way. And I think if you look around the world right now, like where you see the industry accelerating both in terms of its progress as well as its evolution is where you're seeing regulatory clarity, right? It's happening here, it's happening in Europe, it's happening in places where people are provided that ability to confidently build and be able to kind of navigate the industry and its growth path. So I think the more that we get of that, I think the better. And I think we're starting to see some of the benefits that happening here now in Hong Kong.
Yeah, I mean, for me, I think it's all relative and depends on whose perspective we're talking about from a regulatory perspective. So from a kind of virtual asset operator perspective, it's, as Michael mentioned, the clarity, how the regulations work, consistency. So as long as it's permissive and going in the same direction, it gives a certainty. It's all about the C's, actually. From investor, it will be the consumer protection. Regulator, we look at the commitment, whether they are genuinely wanting to push this space. And as a legal advisor, I actually like complexity because that gives me business. So it can't be too simple from my personal perspective.
Thanks for that, Rocky. Chia, Julia, anything to add?
Maybe just to add, maybe a risk-based approach, because cryptos are not created all equal. All has different risk profile and functions. So a risk-based approach will be more appropriate rather than a one-size-fits-all, using the traditional regulation regulate. But the other angle is also being protection-oriented, because like if you see that when many countries start regulating crypto, they focus on AML, counter-terrorist financing, but we see over the last few years, there's an evolution towards consumer protection, because it is still a wild west out there. I think suitable consumer protection will be there in order to get mass adoption for crypto.
Well, I agree with almost everything that's been said, except I don't think making things complex actually creates more legal work. I think it actually makes people go away. So fairly straightforward structures of regulation, I think, are better. But assuming a political will to allow virtual assets, which we have in Hong Kong, I think we need to make sure there's no mismatch between how the regulators behave and what the intention is. And I think that goes to a lot of clarity in the regulatory sector. And in particular, we need speed of decision making, because if things take a year to go away, everything moves very, very quickly in the virtual asset space. And it's, I wouldn't say it was unique, because shipping is probably similar, but it is a space where regulatory arbitrage is everything, and businesses can move very easily to jurisdictions which are going to regulate them clearly. Clearly, there's a desire to be regulated, to give confidence to investors and the market. So I think it's very important that that is underpinned. And perhaps we should look at the KPIs of regulators. Is it only to protect the public, or is there also a balance that it is how many innovative businesses have you actually fostered, regulated and promoted, so that Hong Kong, for example, or any relevant jurisdiction can actually flourish in this area. And I think those are extremely important metrics for regulators to be considering.
Thank you all for that. Some food for thought for us. So given the range of approaches that have been adopted and the international and interconnected natures of virtual assets, plus the variety of services that can be offered by a single service provider, what do you see as the key challenges for virtual asset operators in terms of management of risk and addressing regulatory concerns? Let's start with Michael.
Yeah, so I think there's definitely an element of running a global business that adds to the unevenness of how regulatory clarity is applied. That obviously, you know, when it comes down to the management of the business as well as the operationalization of the business, it provides an extra level of complexity. It just means that there's more things to consider, more things to monitor. And so, for example, you know, having the ability to say, oh, in this particular region, there's a unifying kind of way of thinking about regulation. That's quite helpful, right? So that's what we're seeing over in Europe, for example. And I think that's where, for us as a business, it's important for us to also manage our priorities, because I think there's an element of resources can be deployed towards compliance, but there's also resources that need to be applied to grow the business. And businesses that are able to be compliant and grow, I think, are the best cases for where we're able to kind of push the industry forward, right? And I think that balance is where we're oftentimes finding ourselves, you know, thinking about it a lot. And but at the same time, I feel like that's where I think there's indications of, you know, good business operators and good business management, and that's what we hope to see more in the space.
John?
Yeah, I think you hit the nail on the head. I mean, there's ample opportunity for arbitrage across regulations and across jurisdictions, and ultimately, we're gonna, as a business operator and someone who's trying to grow, you know, an industry, we're gonna find equilibrium wherever it exists. The water will find its level naturally, and if that's in Hong Kong or in Singapore or in Dubai or in Europe, ultimately business will follow clarity, and will follow where the regulations are following through on the engagement with the market and ultimately what investors want. We're trying to make investments looking out 5 years, 10 years to really build an industry, and you need a lot of that clarity to do that.
Cool. So let's look now at something Rocky touched on, which is giving advice to market practitioners. Rocky, when you're looking and talking to your clients about designing and establishing internal regulatory compliance frameworks, what advice do you give them?
Yeah, I think it's a quite interesting one. From a compliance and regulatory perspective, I think we all need to put things in perspective. We can't just have that alone. It needs to match what the kind of corporate structure, shareholding structure, the business model, where the people are based. So that should be all taken into account, because ultimately in the virtual asset world, digital asset, it's all global. So there are a lot of possibilities, different type of structures out there. And in terms of compliance regulatory, I think one thing to keep in mind is the general direction globally. It's basically whatever you touch, whether it's a virtual asset is regulated or not for now, later on you can expect the regulations will slowly or quickly catch up and basically match what we have, more like the traditional security side of things. So in Hong Kong, for example, we have the AML ordinance. So at the start, it's regulating the trading platforms of virtual asset, non-securities ones. There's now consultation about the OTC, which the custom will maybe looking to regulate as well. So the general direction is eventually maybe whatever you're trying to do, it may not be regulated or lightly regulated, but in the future could be more regulation. So I think it's with this future lens is the planning, because when you plan your business, when we also talk to our clients, certainly you'll be aiming to grow bigger and have more operations globally. So with that in mind, then it needs to match up to 12 months, 24 months. What's the regulatory landscape going to look like, and have that planning ahead?
Thanks, Rocky. Julia, did you have anything to add?
Sorry, what was the question?
The advice that you would give to clients who are looking to operate in this virtual asset landscape.
I think I would really look very carefully at which jurisdiction to choose. For some things, Hong Kong. For the probably more established businesses, like some exchanges, they would get through all the hoops here. For something extremely innovative, I don't think Hong Kong has a highly effective sandbox regime, so I would look for somewhere with a very workable sandbox. And I think for some licensing, the Middle East is actually doing quite well. I've worked on some VARA licensing recently, which was relatively straightforward.
Thank you for that insight. Now, Chia, you touched on the gaps and the fact that regulations don't suit all products. So we've seen that existing laws and regulations are not exactly equipped to provide the legal basis around the existence of virtual assets. So what do you see in terms of addressing their risks and the impact? Sorry, I need to turn over the page. What do you see in terms of addressing the risks, identifying inconsistencies, dealing with the gaps in terms of growing and innovation in the virtual asset sector?
Yeah, if you look at the crypto regulation, I think it's one of the most polarized across the world. So on one spectrum, you have the very crypto-friendly jurisdictions like El Salvador that even legalize Bitcoin. On the other end, you have countries that ban Bitcoin or even conducting regulatory enforcement. And many countries like Singapore and Hong Kong took the middle ground, a very pragmatic approach. I call it crypto progressive. I can think of 4 factors that having this kind of regulatory uncertainty that can impact the growth of the virtual asset sector. The first is uncertainty will definitely make companies hesitant to adopt crypto products and solutions. Innovators will be hesitant to enter the market, and investors, similarly with the uncertainty, they will not want to invest further in the sector. And from the competition angle, the uncertainty will make the smaller players are more likely to come up with innovation, difficult to navigate the regulatory maze, right? And at the best, it will stifle innovation. Companies will hesitant to experiment with novel use cases of crypto. At worst, it will promote regulatory arbitrage, encouraging companies to move projects to more crypto-friendly places. And inevitably, some of the risky projects will also move there. So instead of protecting consumer, you might actually harm them. Yeah, I can think of these 4. Thanks.
Julia?
Yeah, I think this question brings us back to the sort of original dichotomy of approach between markets. One is that you take the existing laws and look at how they apply. The other is to set up whole new sets of virtual asset laws, like, for example, in Singapore and some other jurisdictions. And I think both approaches have their merits. However, I do think that perhaps the old divisions between what's a security, what's not a security, are perhaps completely outdated on the basis of modern virtual technology. So perhaps I'm not saying that this is an absolute blueprint, but we should be looking at different categorizations like investment products, currencies, and utility products. And for example, there's this very interesting new debate in the US, although it's always been a question mark, as to whether Ethereum is actually a security or not. And it's obviously extremely unfortunate for something which is so widespread that it's almost become a currency. It's used quite widely for utility in Web3 as well, that should be determined to be a security with all the implications that comes with that. So it may be better simply to determine different categories from the outset that are never going to be one size fits all because of all the innovation that we will continue to get in this space, but they may be broader categories which would be more workable. I also think that to the extent that there could be some kind of overarching regulatory alignment, like you have, for example, with IOSCO in relation to capital markets, those are just loose associations of now I think over 100 countries have signed up to those, to at least talk about some kind of overall approach to regulating this sector and perhaps have some kind of blueprints that at least would be reference points.
So touching on that, both Chia and Julia, you've touched on, same risk, same activity, same regulation. And it's pretty obvious that that's the thinking of the regulators, but it sounds from this panel like that's not the way crypto adherents want things to go. So what do you think, and this is a question for each of the panelists here, what do you think regulators need to consider when they look at shaping the legislative and regulatory environment around virtual asset activities? And can you share some examples of this? Let's start with Julia, because you've just referenced that in your last answer.
Yes, so I'm afraid this might be somewhat repetitive because I do think that certainty is very important in these sectors. So each particular jurisdiction should have some reasonable levels of certainty. And if that involves having to consult with a regulator, they really need to tell you quickly and definitively what the answer is. It's no use saying, come and talk to us, but actually it's just a drag your feet kind of process. And I do think we saw that to some extent, for example, in Hong Kong in relation to ICOs and the original approach to utility tokens here, where the SFC came out and said, oh, this should be dealt with under existing regulation. But actually, the framework of existing regulation did not at all apply to that situation. So I do think that there needs to be more done to actually make sure that we're talking about the same thing. And if something is very difficult, as I said earlier, we should consider extensive use of sandboxes to protect the public, but to promote innovation.
Thank you. Chia?
Yeah, well, I agree with same risk, same regulation. The key question is that is crypto the same risk as traditional asset class? It might not be. So if you look at examples like, for example, like decentralized finance, the nature of it is that there is no intermediary for you to go after if there's a possibility of enforcement. And the cross-border nature of the product makes it difficult to hone down what is the home jurisdiction for that. And also if you look at different kinds of crypto, a stablecoin has a very different kind of risk, right? And then with all these nuances, right, you need to adapt or come up with new regulations to more effectively regulate this sector while not impeding too much of the innovation.
John?
Yeah, I mean, I think there's sometimes in the crypto, ecosystem, this perception that regulators don't understand the technology. That's not been my experience. I think, and maybe it's certainly evolved over the last few years for a variety of reasons. But I think there's genuine expertise inside a lot of the regulators. I think there's hesitation on making mistakes and making bad regulation. Good regulation creates the right incentives for business people and investors and entrepreneurs and builders. And I think there's just a hesitance to kind of go in a direction that ultimately has unintended consequences. And so, I think part of the onus is on the industry. And I think people on this panel, speaking with one voice, or some kind of united voice in pushing some of these things in a quicker way, where the impetus of the regulator is to really be defensive and protective. And I think it's up to us to sort of move things along a little bit quicker and offer more suggestions. I've actually found the regulators to be very open-minded in engaging in conversations around new technology, but what they're looking for is very specific business cases, very specific actions to take. They want a blueprint. They want something that's kind of, all right, here's the business plan. Can we do this or not? And I think there hasn't been, the motivation of the market to kind of go in one direction or speak with a lot of clarity. There's an awful lot of voices at the table, and I think it's incumbent on us a little bit to join together and push them in a direction that's achievable and more identifiable in terms of metrics.
Just a follow-up question for you there, John. Do you see and not to say like where Galaxy is looking to be licensed and the regulators that you're dealing with, but are you seeing that there's differences in how consumer risk is being looked at across the various jurisdictions?
Not really. I mean, look, at the end of the day, the aims and goals of regulation are pretty consistent wherever you look, but the approach is very different. We talked about the dichotomy of kind of wedging and shoehorning, new technology into existing regulations has proven difficult and very slow. And you kind of have to do these mental gymnastics to get there. And so I think, the approach of creating new regs, new definitions seems to make sense to me. But, I think that's probably not the direction of travel of most of the jurisdictions we're talking about. So, I like talking about the new stuff, but I think we also, as an industry, have to embrace the different channels that are being adopted by the regulators and kind of go with them. We got to play their game a little bit.
Okay. Michael, Rocky?
So I'm going to lean a little bit into the innovation side. So I think when regulators kind of take on particularly two concepts, I think it really helps to push this idea. The first is that invention does not necessarily equal innovation. The difference is that invention is just simply novelty. Innovation is novelty and you can commercialize it. And I think the more that we push businesses that are not just simply creating cool new novel things, but also giving them the right kind of path to commercial, value creation and being able to do that, those are the people that I think should be the leaders in helping to push the space forward. I think the second core concept is this idea of jobs to be done. Like we talk about use cases, but it goes back to this point about invention versus innovation. A job to be done is something where it's like somebody's willing to pay you money because the solution you're providing is better than anything else that they have on offer. They want to hire you for it, right? It's a causation thing as opposed to simply correlation. And I think the more that regulators kind of understand what those jobs are to be done, they understand more clearly what guidelines need to be put together to promote that, as well as promote the right kind of players in the industry to kind of flourish, right? And so I think getting to those two, I think consumer protection is always very important, but that balance in how you actually push the innovation side is also equally important.
Yeah, so for me, I just want to kind of bring out what the Hong Kong regulators are now thinking about in shaping their regulations, because I think we're at this stage where both the MA and SFC, they are trying to put this, like separate the subcategories of what we're actually talking about, because in terms of the products and the activities, the services. We have, for example, it's kind of internationally we see it's catching up, but Hong Kong we have the defined terms, so to speak, from regulators. We have the tokenized securities, so it's tokenizing traditional instruments, tokenized bonds, for example. We have the digital securities, which are the tokenized collective investment scheme, more bespoke ones. We have virtual asset, which is like the Bitcoin and Ether. We have virtual asset related products, so it's basically derivatives. Underlying, historically, it can be FX or commodities. Now you throw in the Bitcoins in there. We have the ETFs. We have the retail products. You then mix in the payment side of things, CBDCs, stablecoin, tokenized deposits. So all these different products, should they have the same regulations? Or should they have the same regulation as securities, how we deal with it? Should be not. I think it's an open question for all, but that's what the regulators are thinking. You then tag on with all the activities. You have the dealing, you have the advisory, you have the asset management, you have the trading platform, you have the custody, you name it. Again, same thing. Do we benchmark against securities? Is it the same? So I think having this principle, same activity, same risk, same regulation, it's a good principle. Now, whether you agree, we agree, it's a different thing. Globally, there are different regulators doing different things. I don't believe there's a golden standard. There's no perfect way of doing things, but it's something the regulators are thinking through right now.
Thank you. So now our final question. Looking ahead at the long-term strategies for your firms or for your clients, given the gaps that we've been highlighted this morning, how does this impact you and your business as you look to shape your long-term strategy for growth and product innovation? Let's start with the business first. So Michael, and then we'll go around the room.
Yeah. So at Bullish, we've always believed that the space was going to be more regulated over time. And so we said from day one, we're going to start with having, a regulator, being licensed, creating a counterparty, that we feel people can trust. And I think that that's just going to be the continued path we take. You know, as this unfolds, I feel like it's great to have that clarity come through. It helps us to navigate, understand how best to deploy our resources. But at the same time, the hope is that, you know, and somebody said this to me, I think maybe a couple weeks ago, this bull run is quite different from the last one because it's more of a regulated bull run. Maybe it was even you that said that. But it's one of those things where it's like, yeah, like we're starting to see that, right? And I think that that thesis is playing out. And for us, that seems to be the right take that we took, you know, from 4 years ago when we first started building this to where we are today and where we think we're headed.
Okay. John?
I mean, I think that's right. I mean, how do we deal with the uncertainty that comes? We're trying to be proactive, and so we have a person who's full-time in Washington who's very engaged with both politicians and the regulatory side, you know, firsthand, front and center. We're doing the same thing here. We're involved in industry groups. We speak to, you know, LegCo in Hong Kong. We speak to SFC and MA. I think that's sort of our job, is to at least speak to the commercial side of, here's what we think is useful. Here's the guidance we need to make further investment. Here's what we need to attract capital and entrepreneurship to the city or to the industry. And so it's both proactive and reaching out, and then ultimately reactive if things come down the pipe that weren't expected or kind of catch us in a way where we weren't completely footed. And so we have to be nimble. And so we have to kind of spread our bets a bit around the region or around the globe. And like I said earlier, you know, water finds its equilibrium, and we will too. And we're going to set up shop and do what we do from the areas that enable the business.
Right.
And we want to be regulated. You know, quite what Michael said. We're interested in growing the space, and you know, we believe that there's no path to ultimate, you know, adoption that doesn't go through a regulated means.
Yep.
And so we're kind of very supportive of the journey that we're all on. Sometimes it's slower than we'd like it to be. Sometimes it isn't as fulsome as we'd like it to be, and the incentives aren't quite there. Mm-hmm. But we're going to continue to kind of work in that direction.
It's like music to the regulator's ears, what the two of you have said. Chia, do you have anything to add?
Coming from the perspective of running a crypto company, I think the first strategy definitely is looking at jurisdictions whereby there's regulatory clarity for crypto businesses. Second thing is looking at the products that has more clarity than others, because as you can see, like in Hong Kong, they classify different kind of crypto activities into different regulations. So we only look at the products that has the most clarity. For example, in Singapore, will be OTC, will be crypto payments. And then the third thing will be really invest in compliance framework and the tools to help in the compliance, because ultimately, for the regulators, right, the first and foremost concern is really on anti-money laundering and counter-terrorist financing. Last but not least, regular engagement and collaboration with industry bodies, with the regulators, giving them feedback what the industry is feeling the heat of the regulation, or what are the gaps there, or what can be done to help are going to be key for a crypto company.
Julia?
Well, obviously the business cases are the most important, but as a lawyer, I think our role as a professional advisor is both to support our clients, and I'd like to think that could be large and small companies that want to be involved in the crypto market. I think there's a big tendency of regulators to much prefer larger entities because they see them as much safer, whereas in fact a lot of innovation and new thinking may be coming from smaller entities. And in presenting all of this to regulators, of course, if regulators can be relatively confident in the sort of lawyers and professionals they're dealing with, I think that helps everybody, including the market players and including the regulators. And as I've mentioned endlessly, I think sandboxes that really work would be extremely useful. I also hope that there will be a greater match for bank accounts, especially for smaller entities. And I think perhaps virtual banks in the fintech space that can be matched with virtual asset service providers is probably a good way forward, and that should be something which should be hugely encouraged and perhaps looked into more by our HKMA. We don't have much in the way of genuine online banking here. We have more limited banking services in that area. And Hong Kong traditionally is an extremely well-serviced market for banking. So if any market could manage to do this, it should be Hong Kong.
Thank you. And to close us out, Rocky, final remarks?
Yeah, thanks. I think as Julia mentioned, for lawyers, we aim to be the trusted advisors to our clients. So of course, legal regulatory side, that will be our expertise. But I think we got to mix in, as we mentioned earlier, the business strategy, business thinking. And I think Michael mentioned a really good point. In terms of the planning ahead, what it means, etc., it's a business strategic decision as to what the particular business are thinking the next step will be, the opportunities, what they are looking for. The next big one, is it institutional money? Maybe, maybe not. It's a strategic discussion and thinking to think about. For example, the Hong Kong trading platform opt-in regime earlier, you then have to decide, okay, do I opt in? That means you need to change or you have your particular business model to fit into that regime. Do I go in or out? It can be a choice, and it's a business decision to have. And you're planning going forward, and of course, as part of it, regulations is important. And I think it all goes into a mix as to how particular business would want to shape themselves and what they're aiming for, and in particular with that short-term, medium-term, and long-term planning as well.
Thank you. Thank you to all of our panelists for their time today. I think everyone in the audience has heard that people are interested in being regulated, but that there are some issues with the current form of regulation. So please, if you have questions, come and find us. We'll be wandering around all day. Have a good rest of your day. Thanks.